What is up? This is how you're going to mark out your chart pre-market every single day before every trading day. So first thing you want to do is start on the NASDAQ or S&P 500, whichever you like to trade, or both if you use SMTs. So let's go to both. And we are going to want to start on the daily and mark out our previous day high and previous day low. So we'll go like this. I added templates so that I could quickly mark and don't forget which each line is. Sorry, previous day high, previous day low. And then next, what we want to look for on the daily is any other key highs and lows, and daily for value gaps. So we have a daily for value gap right here. We have gaps right here. We can mark this if we want. Not too necessary for me, but I'll just leave it like this. And then next, just scale down to the 4 hour and look for 4 hour highs and lows and 4 hour for value gap. So a 4 hour high right here, a 4 hour fair value gap right here. And again, I like to mark all gaps with a template so I don't forget which each one is. Let me mark this daily. Okay. Then now we're on the 4 hour. We marked all our highs and lows. Recognize what trend we're in. We're kind of in chop right now, but I would say overall pretty bearish. And then we move to the hourly. Same thing on the hourly. This is getting repetitive, but again, mark out your highs and lows that look important to you. Any hourly for value gaps, you don't have to mark every single one, but the ones that you think might be important. So maybe mark out like this inversion right here and move on. And keep scaling all the way down to the 15. I do not use the 30. And just do it again. Mark out your 15, 30, and then all the way down to the 1 minute. And you don't have to mark out everything. Just stick with your high time frame highs and lows. And then most importantly is your session highs and lows. This is all the information right here. This is EST, so New York time. New York is opening at 9:30 in New York. I'm CST, so my time's a little different. But next thing you want to do is mark out your session highs and lows. The session is currently New York, and it's still active. And like what I would do, for example, so for me, London opens up at 2 a.m. So I'd go over to my chart, go to 2 a.m. right here on the bottom, and find the high past 2 a.m. So this would be my London high. And go all the way to here. This would be our London low. And then I would wait for something to happen at these levels and see how it reacts. A lot of times we get reversals or draw towards these levels. Like right now, we took out London high. We broke past it strongly, kept pushing higher, tapped into a 4 hour, and now tracking towards London low. So these session highs and lows will be strong draws in liquidity. They'll act as magnets for price, and price will want to move towards these. And then we have Asia session and New York session. Mark out Asia high, Asia low, New York session high and low. I like to mark out like New York AM low, New York AM high, because those are also strong draws in liquidity. And then you could do New York PM high and low, but I don't often do that. I think London and Asia are usually good enough, but obviously it depends on market structure of that day. But yeah, pretty simple. Just start at the daily, previous day high, previous day low, and then mark out your fair value gaps. Same thing on the 4 hour, same thing on the hourly, 15-minute, 5-minute. You don't really have to go all the way down to the 15-minute because you usually already have all your key highs and lows already marked out. You don't want to clutter it with every single high and low. Focus on those external highs and lows and those session highs and lows and then those high time frame fair value gaps, because those will all be strong draws in liquidity, and you could be able to make discretionary decisions out of those. So for example, we go up to a level, say London high, and we get an inversion CISD out of that, we'd want to be shorting there. Or in this case, like we took London high, but we have more draws in liquidity like this high, and a unfilled 4 hour. So we wouldn't want to be shorting until this draw gets taken, because once this is taken, there's not really anywhere for price to go. Like this void right here, like price, I mean, it could push up, but it's a lot more likely to reject and attract toward the other draws that we still have left, like London low, previous day low, is what it's more likely to attract to. In this case, we had a data low that we left, and those are also strong draws in liquidity. I forgot to mention data high and data low. So when we have a news event on like Forex Factory, we'll get a big candle like this. All you gotta do, mark the bottom of it, data low, and mark the high is data high. Those are strong draws in liquidity. Price is going to attract towards these. Again, these are magnets towards price. We left this data low. Price keeps trading. We trade into that 4-hour void area where there's not really much for us to push higher. And then right after that, we attract towards data low. We have London low too, but overall, I think I have a sheet of everything right here. So here's just the overall breakdown. This is EST. Just figure out what this is for your time zone. Asia is 7 p.m. to 4 a.m. Eastern, London 3 a.m. to 12, and then New York 8 a.m. to 5 p.m. But New York Open is at 9:30 a.m. And then here are just some of the overlaps of London and New York. But in my opinion, the most important thing for you to know is the New York macro of being 9. So in EST, 9:50 to 10:10. This is the area and gap where you're gonna find the most setups of a sweep of like a session and strong displacement. Not too volatile, but like it's the perfect mix of volatility, and we get the best moves during that time frame. And we also have 10 a.m. reversal there. So 10 a.m. is a common point where price will reverse, and you can use that to your advantage after sweeping out a key level that we just talked about, all of them. And yeah, that's overall, that's how you're going to mark out your chart every single day.